Very good morning, everyone. Welcome to Admiral Markets. My name is Chris. Today's focus, of course, as always, on technical analysis, looking at live charts and graphs. And before we do that, though, be aware that this webinar is shown to a global audience, but may not be suitable for everyone. Take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity to find out more about that and other details. Also, please be aware that trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. Plus, by continuing watching this webinar, you agree with this disclaimer and you're aware of the risk involved when trading. All right, thank you so much for your attention on that. As always, I wanted to make a quick introduction of Admiral Markets by explaining that on the website you can find a lot of info about the products that are available to be traded through Admiral Markets, but also the trading platforms. There are various options like MT4 and MT5, when I traded 4 and 5, but also MT4 Web Trader. That means that no software is needed, but also MT4 Supreme Edition with a lot of extra plugins, extra features through that plugin that help the trading experience. We got also analytics for your information, fundamental. You're looking now at the most recent fundamental article, The Return of Inflation. Take a look. Very interesting, written by Darren from the UK office that is in charge of research. Wave analysis by myself, technical, all of it is here, and of course education. So as we always, we're going to take a look at the calendar first of all quickly, and then the heat map, and then we'll take a look at the charts. By all means, if you have any questions, of course, please feel free to let me know through the chat. Bob already did so, and great to see you, Bob. I know that he was on a small trip there, so I hope that was a great time and you enjoyed it very much. And he's looking for some good trades in what looks to be a quiet period, and that's true. There were some volatility spikes on the euro dollar, pound USD, but it's now a bit quiet. Let's see. Last week we had, of course, a big week. The Fed ultimately saying, we're not going to raise the rates that much maybe this year. It's not going to be a scenario where we might raise 4 or 5 times, but probably a bit slower than that. So they're trying to calm down the markets, because when they raised the rates the first time in December last year, there was a path kind of communicated that seemed probably a bit more aggressive, and they're changing that narrative a bit, that pace, saying, well, we're going to be a bit more cautious. When you look at inflation, things are indeed not all too good. I mean, from in the developed economies at least, we're seeing slow inflation. The rates of inflation growth is slow. So, of course, central banks are looking for a moderate rate raise in those inflations, and we're not really close to that. So that could be definitely something of concern for the Fed. Some growing economy or developing economies have pretty big high inflation rates. So that makes actually things a bit more volatile as well. So it's quite a complex story. But it looks like the Fed didn't want the dollar to raise maybe that fast as well. So we're seeing the dollar in a correction. But my view is that the dollar will still continue with its strength at one point. We'll dive into the charts and show why. But let me finish this calendar thing here. Economic sentiment, inflation rate, and business climate. So we have some news in the Eurozone today to be cautious of. Let's take a look at the heat map. Last thing. Apple 2% up. Brent is down, but we're looking at the Forex pairs here, and we can see that typically probably the pound and yen the biggest movers. Dollar again on that lower range, and we've seen this day in day out, that the dollar is really quite low in its range. not as much movement. Swissy is what we would expect it to be in the pound, and especially pound, but also sometimes yen indeed. And Aussie, surprisingly big movers, CAD. Yesterday, the pound and yen. Looking at specific currency pairs, what do we see? We see pound USD, pound Swissy, New Zealand yen, pound yen. Alrighty. Good. So let's move on. So yeah, the dollar, I think that we might not see necessarily dollar strength in the next few weeks because of this last FOMC statement. But ultimately, I think that the dollar is just still consolidating and correcting before it's going to make a bigger uptrend continuation. Yes, we did have some bearishness on the dollar because of this in recent weeks, but I think that it's just a slowdown. It's still a retracement, I think, for more upside. Now, that upside might go choppy, might go slow if the rate hikes are indeed slower than expected. But ultimately, we're talking about the pace of rate hikes, but we're still talking about rate hikes. You see what I mean? So just because the pace is a bit slower doesn't mean that the whole story has changed and they're talking about no rate hikes all of a sudden. It's still a discussion about when and how often. So if you compare that to ECB, and then of course they went down with their rate hike. They went down with their interest rate, to 0%. And so that's all monetary tightening, loosening, right? Whereas the US is doing the opposite. So there's still a big divergence between those big economic entities, and therefore maybe the pace of the upside is not as much as expected because the rate hikes are slower and less of them, but still I would expect the dollar to push. All right, let's take a look at the euro dollar. We can see that we're reaching, from a technical point of view, this orange zone, which is a big resistance level. And from this point of view, this momentum is where we had that huge dollar strength. All kind of factors came into play. The ECB, decreasing the rates and putting more monetary quantitative easing, and the dollar, the US doing the opposite. So we saw the euro dollar fall a lot. Now we've had a lot of indecision, and this looks like a typical kind of consolidation correction box. And my view was at that time that around here, this is taking too long. So there's going to be a big correction, and that indeed has taken place. Now, the question is, will the correction end? I think yes. I still think there's nothing has changed. This is still a big correction box. And as long as it doesn't break above the 50, the bearish scenario stays intact. So from that point of view, this is still bearish territory, especially if it stays below the 50, but of course even more so below the orange box, there's 38.2. All of these areas could be turning spots for downside. All right. Now, as price basically moves up here, any of these spots could be actually a turning spot for that downtrend continuation. We just don't know when and where, and that will depend a bit on fundamentals. I do believe. Maybe not. I was expecting that it could be March. Back a few months ago, when I said, basically, when I was looking at the monthly chart and saying, okay, here we had 5 to 6 months not breaking this low. We'll get a big correction till at least next year, March. So we've had that. But at this moment, it doesn't look like we're going to get the turn right now. It still could happen, but this month doesn't seem like it. It doesn't seem to be it. And in fact, if we get a bullish candle like this, it might not even be next month, but it could be May. So, that's, of course, the timing of such is always something that could be updated and changed. March was kind of the minimum moment, but not necessarily the only moment. It could be after that as well. Also, when price was approaching this double bottom here, we said that is still too soon, and we did get the bounce. So how long can this bounce last? Looking at the current monthly candle, which isn't closed yet, though, I would say that there's a chance that May seems more likely at this moment. But let's keep an eye the next 10 days, or 8 days of trading and see how this monthly candle really ends up. For the moment, though, weekly is approaching a resistance zone, as you can see, and it can still climb a bit more. And then later next month, or as May, as I said, that could be the big turning spot. And then we could see, slowly but surely, we could see price do this and keep falling and break to make a new lower low. Now, not everyone is convinced about that necessarily. Some expect that this consolidation box could stay for a lot longer than that, a lot longer than May, maybe for the rest of the year. I think that is not so likely. You never know, obviously, but I will attach that pretty low percentage to that. I think that we will get a break to the downside in April, May, or June. But actually, I thought that March, April, May was very likely. Now, with last week's statement, it could easily be June as well because everything kind of shifts forward a month. All right. Anyhow, back to more of today's concern, and that could be the 4-hour chart, for instance. We see that price broke this triangle that we were talking about at the 38.2 fib, took 2 days to get to the minus 272 target, and has respected that target by making a bearish retracement. In my recap video, I was telling you yesterday that this is an important level right in here at 112.25, 112.50. I think that this could be a bouncing spot for a follow through to the minus 61.8 target. And that could be a big resistance spot again for a retracement or reversal. So that was one scenario. Or if price manages to break through that level, show some momentum, and then make a bear flag or pullback, we could actually be probably continuing this reversal or retracement back down. Also, if it would show a bear flag here, there was also a good chance for continuation if it broke through support. And one more thing, if it broke this trend line, there could also be another additional signal that we could see the upside. So very interesting spot, I think. We have potential for a break, pullback, continue, like this, on both sides, up and down. We have a potential for a bear flag, and then probably a break to either side as well. And this could be a bouncing spot, lastly. So those are kind of the things I'm thinking about. So for the moment, all right, for the moment, we did have a bullish candle. The last one is actually bullish, but it didn't turn the 8 EMA up, in fact, so it's a bit of a small 4-hour candle. And I'm a bit hesitant to say that is a strong reaction to that. I think it's still a bit on the weak side. If it would have been a little bit bigger and it would have been changed the 8 EMA to make it bullish, I would have maybe considered a long. Now I'm really, really seriously doubting if that's enough to be considered a bounce. And I would probably rather stick to the break. The break of this trend line, I think, would be more of a signal for a long. Break of this fractal with the stop loss below the bottom, I think. What are we talking about here? About 40 pips, which is fine. Probably a safer, I think, approach to tackling the euro-dollar upside. Now, downside not, because price is still above support. This zone for me is clear support. We have a top on the left as well, so I'm not going to look for any shorts right here. It would really need to show consolidation and break through the bottom, or show momentum like this and then make a hook back. So that would be the only things that would make me interested in shorts. So yeah, the bounce trade idea is something I had in mind, but at the moment I think there's too much indecision. When I look at price action, how it's moving, I don't think that it's a good moment. Very choppy downside. And it could certainly be support right in here. It's possible. But I think that this upside basically was just a tad too weak for me to consider basically a momentum pullback continuation. All right, let's move over to the pound USD. This pound USD is looking more bearish than the euro, and one of the reasons is because price has already reached a pretty deep fib, the 78.6 fib, and looking at the reaction as well, it's pretty impulsive compared to your dollar. So those are two things I think that do change that kind of environment. We also see support down here. There's no really other support at this moment. We got tops in here, so I think that there's space to fall to at least that level. So let's put a line right there. Alrighty. Let me get rid of this fib. There we go. So if we put a fib on the last swing high, swing low, and that might not have any meaning, in fact, because especially in this correction, there seems to be a lot of zigzag, a lot of impulses to both directions. But we also see a 50 fib. That could be a level to reckon with, 142.75-ish. All right, so that could still see a bounce. Obviously, if price does not respect that level and starts to continue like this, then definitely more of a bearish environment. But this is a pair that is highly, I would say, is very much a mixture of a lot of things. So you could really read it both ways. Yes, you have a 78.6 fib here, but this could easily be an ABC zigzag as well to a higher resistance. But the 78 could be easily a turning spot, and we might see this. So I'm a bit cautious with this one. I don't think that it's a clear read. I think there are a lot of factors playing into this with the pound, and I think it's a difficult currency pair at the moment. You got divergence, which could easily bring price higher. Then again, you still have a very strong downtrend in play. We had a sturdy correction, and this could be all of the correction before you get a downtrend. So I think this one is a sensitive pair. Let me say it this way. I think it's not the one that I'm maybe really jumping for joy to trade. Yes, I do expect maybe some downside here, but if you look at the space, it's quite tight. At least for an hourly chart, it certainly is. Maybe on a 50-minute chart, it's actually already breaking lower. Seems we're a bit late to the party now at the moment. Anyone who took a break of this small bear flag could be doing well at the moment, probably, but that seems to be a bit late. It would need, for this moment, it would need a bit of pullback to make that one more drop. Let's take a look at the 5-minute. And looks like this one is pushing. Now, I might be exaggerating the 50 fib. It could also bounce up to 61.8. So what could happen is that if it falls, hits the 50, and makes a correction and looks like it's a weak correction, there could be one more fall later today in the New York session, maybe to the 61.8. All right, dollar yen turns at the 50 fib. I think if this is a good 4-hour candle right here, I think if that closes, it could be a good short. This looks corrective. This is an impulsive break, and clearly had a good triangle break here like this. There was momentum prior to it, so I think that this could easily be a break, pullback, continue. So how far can the pullback go? These fibs will give us an idea. At the moment, it stopped at the 50 after stopping at the 38.2. A short could have been taken at the 50. If not, then I think another idea could be to wait for this 4-hour candle to close anything like it is now, actually. Any close that is near the low, something like this, with a decent candle like what it is showing right now. It isn't closed yet, but if it does close like this, the candle is breaking below the lows of the last two candles and is showing a clear intent of downside, I think that a short there with a stop loss above the candle high, I think is a trade idea that I find interesting. Now the target could be either the bottom here or the target at 110, secondary target 108.70, or third target. Trail stop loss can be used by trail stopping strong 4-hour highs or fractals. And I guess that's about it. Or time factor as well. If 5 to 6 candles do not break the candle lows, like here for instance, we had 1, 2, 3, 4, 5, 6 candles not breaking this low, and that could have been the candle to exit any shorts that were here. And this could be a candle perhaps to re-enter. But let's see. Last thing, let me take a look at some of these moving averages I use. Yeah, I think that if this 8 EMA turns bearish, I think that's an extra confirmation. So I think that looks pretty well set up. So that's one setup I think that could occur soon, in my opinion. Let's see how that goes. Alrighty. Moving on to the other yens, pound yen and euro yen. We got pound yen, we have perhaps divergence between the bottoms, which, as I said, doesn't necessarily exclude a short in this zone right here, but does mean you got to be careful when price approaches the bottom because it could be still a bouncing spot. So it just makes it a bit more cautionary because of the daily divergence. Doesn't mean it will necessarily play out though, but something to be cautious of. Now the pound yen could be similar. We already had a very aggressive move back to the tunnel, the long-term moving averages, and a turn at that. Pretty good momentum down, and we're seeing kind of a correction. So this is in fact a moment where price was not able to break above the moving averages here. Looks like weakness. And this could be the second time or third time it's turning back down. So this seems same like the dollar yen. I think it looks like a good short just on the 4-hour candle. If it closes like that, stop loss above it with the same plan basically regarding trade management. But target wise, I think the probably minus 61.8 target could be good, 155, 156. Let me add two fibs, the Fibonacci targets and the retracement levels. All right, this target is quite deep. And it might be a bit risky. Now you want to take this, very careful because it is a 150 pip candle. So that is not easy for everyone. Be careful of your risk. If it's too much risk, don't even think about it, right? It's not worth it. If that stop loss size is too much of a risk on your account. Or if it's still okay, make sure to adapt your stop loss size to make it a reasonable risk. All right, if it falls, the 61.8 target is a conservative target. That would be about a 1-to-1 trade, just a bit more. But there's not much. Let me see if I can. Maybe it's this fib. It's better. Yeah, that lines up a lot better. I think that this fib is better. 50% hit here. And yeah, it looks like the 61.8 and the minus 272 target, 158.30. The first target. Then after that, if it continues, this would be the target. Now those are both conservative targets because, as I said, there is daily divergence. Those could be bouncing spots. But if it doesn't, then obviously you're looking at these kind of levels. if it does manage to post a new low. That's a bit more aggressive targeting though. So I think this is an interesting potential here too. Just like the dollar yen, I don't think I have much to add. Now, whether this will get a bounce up or not at these fibs, well, let's face it, we do have daily divergence, we do have 4-hour divergence, we do have 5 waves here. So those are things to consider, and this could easily be an A, B, and this is a C. And this short idea that I have for myself on the pound yen 4-hour chart would be a part of that C wave, basically, or could be that, and could bring price to those Fibonacci targets and retracement confluences like these blue levels, and there could be a bounce. And I would not be surprised if that happens. Now, I know that there are traders out there that are bearish in the pound, and they might not agree with me. And it is true that this is technically not divergence just because the oscillator didn't reach the zero line there. But I mean, in all fairness, it's so close. I'm a bit skeptical about not counting that as divergence, and a bit leery and worried about being too dismissive of that as not being divergence. So we're getting really into details here, and considering the other things that we saw, I think that there is a decent chance, at least minimum 50-50, I would say, of having this or having this, the green and the red arrows that I'm showing you now. So that's why I want to be careful and approach it, with a balanced reading on this pair. Alrighty. Next one, Euro yen is a tad different. There is no divergence on the daily chart, which makes it even more of a mixture, right? Because pound yen has it unofficially, Euro yen doesn't have it at all. So kind of a mixed bag yet again on this. Let me renew the template here. Let me make it more visible for you. There we go. So no divergence on this one. A lot of strong pullbacks though, but no divergence. So that makes it a bit more suitable, I would say, for that downside. And that's a bit ironic because actually euro dollar looks better set up for upside and pound dollar looks better set for downside. So again, a bit of a mixed bag here. Makes it a bit awkward in a way. A 4-hour chart, we see surely a strong pullback and price in a consolidation box, moving averages on top of each other. So I'm not so sure about the signal to short when looking at this candle because we got support levels so close by. I think I would rather wait on this particular pair. Probably would do the same and follow the pound yen and dollar yen. But I think it's a bit less suitable perhaps considering this box right here. Let me change this quickly. There we go. So probably rather wait for a break, pullback, and continue. Aussie finally reached that target. Now it kind of threw a curveball at me because I was saying that this level is support right in here, and it made one more downside here, which actually I was waiting for the break here to the upside, but it made one slight more downside and then turned, so it caught me off guard, unfortunately. But generally speaking, it did make that bounce that we were looking at. It just did that without me, unfortunately, but maybe it went up with you. That would be great, and you got some nice pips probably. It did bounce off that support level and made it to the 76.50 target we were talking about. And now it's showing a bit of momentum here. It's showing a consolidation box like this. So it's mixed bag too, in a way. And I think that we're going to probably see or need, I would say, a breakout of that to have a chance of most likely a bigger retracement or a continuation. If I put a fib from here to here, 75 seems the target to be. And if I put a fib from here to here, you see that there's a fib here too, 61.8. Got to be careful with the 50 fib too though. And if it does bounce off one of these fibs, there's still a chance to go up to this target. There's no divergence here, so I think it still ultimately looks pretty strong. There is a 4-hour divergence though, which means that either now or after the push up, we might see a bigger correction finally on this odd USD. All right, pretty clear actually. Alrighty, so these fibs can be bouncing spots, but they could just be mere stopping spots considering the 4-hour divergence, and price could slowly tumble like this. So good places to short, well, I would say probably after it breaks, hits the 50, we get a bounce like a bear flag. That could be a neat spot to look for downside. Divergence on the 4-hour chart here, at least on my oscillator, it does. Here we have a higher high on price, and we have a lower high on the oscillator. Now the hourly doesn't show it, so it might be so that we push up to show a double to show a divergence on the hourly. That's possible. And then the 4-hour will get maybe one more hump like this, and then fall again, and you'll have kind of like a double divergence here. So that's why I think these trend lines are important. If we get a break, and these fibs are important too. Because if we get a zigzag like this down to the 61.8 fib, and price goes sideways, we might see a continuation. But if it shows something like this, and then it shows a triangle, well, then upside is more likely. That's why it's good to know these zones, which are important levels, and then sometimes we just have to wait to see how price responds to those levels before we could have a better judgment on which of these scenarios seems more likely. Because we don't know how price will respond to the 61.8 fib. At this moment, we really cannot say which one is more likely, a bounce or a break. It's just that simple. Both are possible, and that has to do. It's in weather forecasting. It's the same thing. In weather forecasting, the likelihood of being accurate is vanished after 7 days. You might as well use the average climate data, and you'll be probably better off than trying to make a prediction. So it's the same with the markets, and if you look too much ahead, then it starts to, the chances of trying to read it are also going down, right? So, and weather is maybe an example that is often criticized and a bit made fun of, and that's all fine and well. But actually, nowadays, what I've read at least is weather forecasting is very accurate, actually, for those 7 days. And after that, it doesn't matter. Too many variables, too many things that could change it, too many paths of the different paths that can unfold. And because there's so many variables in those 7 days that this could happen or that could happen or that could happen on all of those days, there are too many scenarios to consider. So that's also for price, basically. Not a big fan of the Kiwi at the moment. Our trade last week did work out well, the divergence here, and we got a bounce here, as we said, got a big bounce. Didn't only go back to the long-term moving average, but it went way past that, so that was good. But at this moment, Uh, I don't know. I don't see much of interest here. We are at a resistance zone, so there could be a bit of a bounce off that, like it already has done. In fact, very choppy. I don't know. This does not appeal to me. Anyone looking for shorts up in here, that could have been good, but now not that interesting to me, at least. There we go. So how about that? Let's see. Dollar CAD. Well, it's definitely a surprise to me how much it has fallen, how much CAD strength we have seen. That reversal kind of came for me out of the blue because there was not much momentum weakness in that rise. So one more push seemed likely at that moment. But sometimes you can see it just uh, turned on the spot, and no much sign of divergence on those higher time frames, at least. There was a lot of divergence between these bottoms, but really not playing out at all. So from that point of view, as I said, I'm not touching this dollar CAD. I'm not trading this because it's not really responding to that divergence. I'm not really interested in trading with that divergence either. And I think that caution about not taking reversals was good because you can see, at least I didn't lose on it because it did continue one more time despite those triple divergences. So it's a bit of a nasty pair at the moment. And who knows? Now we've got another strong fall, so this could be easily another correction. So if anything, I would say it still looks more bearish. And if I look at the targets, probably any of these two could be a turning spot. But don't forget there is divergence, so still there. Dollar yen, yep. Basically, I'm looking for short as soon as this candle closes, with the stop loss above it, above the candle or fractal. Trail stopping strong candle highs and fractals. Targeting, well, basically main target being the Fibonacci targets here. When putting a fib from this swing high, swing low here, 50 fib hit. Looking for price to move down to these targets. A strong candle close, indicating the turnaround and the bounce off the 50 fib and continuation with the downside. We had a triangle break. This looks like the break. This looks like a pullback, and this could be a continuation. And this could be the signal. That candle could be the signal that the pullback is over and that price is dropping again. So for me, it's a very interesting potential short there. As soon as the candle closes near the low and the 8 EMA turns bearish. Also, if candle count, if 5 to 6 candles do not break for a new low, then we could see some caution. Bank of Japan, let's see. Maybe I missed some news event. Is there a particular news event on the horizon, Bob? I maybe missed that. Intervention? Well, yeah, that's always a bit of a risk, but I think in this case, smaller. I don't see any divergence. I think that considering the price has gone sideways so long and has stayed below this support, I think probably it's set up accurately and well still for one more downside. Now you never know. You cannot rule out any intervention at any point, but technically I think that it's from a higher time frame. I don't think the Bank of Japan necessarily has to worry about this downside. And the reason is because on the weekly chart, I think this is still a correction and could still see a bounce. If we put a fib from here to here, right? I think that the 38.2 fib could be the bouncing spot for a recovery rally, or at least a bounce at the minimum. Then we'll have to see how price responds to that 21 EMA band, and if it manages to get above it, there could be a lot of space for an uptrend continuation. So I was always cautious actually with trading it down to the downside here, and avoided much of it actually in this area. I was looking for that long-term rally, what we got. So I definitely understand anyone who has hesitations because of that. And I would say, if you have any doubts about it, then don't look for that trade. Then I would say. But I think from my perspective, it should still be okay. I definitely had the same hesitation down in here. Now I think that technically it's still okay until the 38.2 fib. Alrighty. Let's see. MC, what do you mean with the bombing? You mean there are a lot of news events today? Sorry for that, but I'm not sure. Pound odd is same like the pound USD, but maybe even worse because there's double divergence on the 4-hour. It doesn't really have that on the daily. So this looks pretty well set up for continuation. If price can make an upside. Oh, I wasn't aware about that. Let me check the news. Thanks, MC, for that. Oh, yeah, I see that. That's always, of course, something to be careful of. And it seems to be happening today, indeed. Didn't hear about it yesterday, indeed. So, yeah, I'm not sure if it's bombing. Sounds like. Oh, wait, they say 2 explosions. So that's probably not coincidence, and not could be still maybe. I haven't read the report yet. Is it an attack, or is it something that is just a failure and an accident? Let's say. Do you know about that, MC? Alrighty. Okay. Seems like an attack. Yikes. Yeah, that's something always to consider. Let's see. Euro dollar is moving down a lot from that. Maybe it's because of that. Who knows? I never try to dive into the why all too much. I don't know if it makes sense, but that could be certainly a reason. Who knows? This support level, not important in that case, and yeah, that could be a part of that. So it's good we were cautious from this point of view. I'm not sure if this break is going to last because of it. Maybe the news is dominating now the movement. So I think it's probably for traders a good time to be cautious with that and be more careful with reading breaks like this. But technically, though, as I said, I was looking for a break, pullback, and continue. That could still be valid, but in general, with news like this, unfortunately, it might be reason to be cautious, right? And if the break still happens above support, I would still say there's a good chance of a breakout up to that target. Okay? Let's see what's going on with the pound. It's falling too, close to the 50. Still looking for a pullback. Look at the 5-minute. There's a lot of momentum here. The 5-minute has really shown a lot of power. So I think that we're not sure how long it's going to last. Look at all these candles making lower lows and lower highs. Eventually, though, that is going to stop, and we're going to see a retracement, and then I think there's a good chance of continuation now, considering this momentum. So one of my tricks that I do is I don't try to catch the first initial momentum on the London, because often it's a 50-50 if you get choppiness or if you get false spikes and stuff like that. I rather wait for price to prove itself and then look for basically a pullback for continuation. I like that more. This momentum, I think too, I think it's getting to a point where I think the news is probably influencing it, because I don't think that it could be influencing it. Let me say it this way. Dollar yen, let's see. Still at the same spot. All right, euro yen is getting a break. The news here too, probably pushing the euro dollar here, pushing. So we could see that pullback to that support level at around 125 and a continuation. And the pound yen 4-hour candle is really becoming big. So I don't think I would take it on the close. I would need the pound yen 4-hour candle to retrace part of that candle to make it interesting short. Because now the stop loss is really getting way, way big. So I think the better response to the pound yen is looking for a pullback to maybe the 50-50, for instance, with the stop loss here. The pound odd, I would love to short, but I would like it to go up to, for instance, 192. $193.50. Those are levels I would really find interesting to look for shorts. Alrighty, those are the minus 270 target. You can see we had a 38.2 fib bounce, went up to the target. Now we're at the 50 fib. That could be the spot for a move up to that 192. And then this could be ideal location here or at the next target for a turnaround. Euro odd is a mess. I'm not looking at that one. Pound New Zealand looks like a bit of a bear flag, but one that does have divergence here, double divergence. So from that point of view, I think the pound New Zealand is definitely something that could make a retracement up to the long-term moving average. So I'll be careful with downside on the pound New Zealand. All right, those are the typical pairs we look at. Is there any cross or instrument you would like to take a look at? It could be a stock, it could be an index or a commodity. Let me know. We're seeing the Aussie fall also very quickly. And we're seeing dollar strength after this hour. So we can see that price is breaking through this bottom. So that looks like it's going to also be a short today, pullback and continuation. Dollar index, we see basically the rise that we had, of course, and now the consolidation box, just like the euro dollar, in fact. and we had a bit of a break through support because of last few weeks through that support trend line. But as I mentioned earlier, I don't think that this is a reversal. I do think it's still a retracement for more upside, because just looking at the narrative of the Fed, we're still talking about how fast the rates are going up and when, and not talking about if. So I think that's still reasonably bullish. Maybe not now, but as soon as the talks about when the next rate hike is going to occur, I think we will see the dollar start to rise a bit. It might not be as impulsive as last time, and it could be choppy rise, but I think we will see a bit of a rise like this. Could be like this, right? Easily. Now, I'm not the only one, by the way. I yesterday read that a report from Goldman Sachs, in fact, that they're looking at dollar strength to continue, or that's their opinion. So let's see. I think the stock indices are quite a difficult read at the moment. They're, for instance, S&P 500 all the way up to the 78.6 fib. It's difficult for me to believe that could not be a resistance spot, could not be a tough spot, and a potential bouncing level. But who knows? Maybe I'm overestimating this rally. Now if we start to, let me take off this fib. If we start to look at it from this point of view on a monthly, right, we still have a very strong impulse, and this is maybe only but a consolidation. So, and it's fair to say that that could happen, and we could see a break and continuation, and that could certainly be so. But if I look at time and the number of candles, I don't think it's going to happen in this quarter. I still think it's going to be later this year if that happens. So from this point of view, I think there's a higher chance of things just going sideways, and therefore, or who knows, maybe a bigger retracement. Seems difficult to believe at the moment, but that could still happen. So I think there's a good chance that this is resistance. I don't see it break above that happening soon. That's my 2 cents at least. Let's see if that's true. Gold and silver going sideways after some impulse. Probably will continue a bit higher with that. And oil too, I wouldn't be surprised if it can still push a bit, but it is getting close to a target. And there I wouldn't be surprised for a bit of an ABC correction back to support. So there could be still a small rise in it, but eventually I think we'll see some correction back down. Now these are not, instruments I analyze regularly, so that's a warning I want to add. Okay, so far no one has mentioned any exotic pairs or some minor crosses that you might like. If you do, by all means, please let me know if you want to take a look at one particular currency pair. I don't know, like the odd New Zealand. Just feel free to say so. Euro yen. Basically, let's take a look at. I don't see any divergence on the daily chart. So if I'm looking for a swing trade, then I think there could be a chance of getting down to 120. Minus 272 target. Gotta respect it to 50 fib. So that could be one target to go after. Now a more maybe intermediate target, because this trend line is being broken. That looks nice. More intermediate target could be to put a fib on this. All right, let's see where the fib targets are. Probably these two are conservative targets. 123.75, 122.75. Now those could be bouncing spots. They could be moments where price stalls or goes sideways, perhaps before it continues again. Ultimately, I think there is a good chance on the early end at least to get down to the target, but you never know. Doesn't have to be right away. It could hit this target, turn pretty steeply, and then fall. So, more conservative target are these, the Fibonacci targets of this swing, basically. Especially the minus 61.8, the 123.75. Alrighty, so if we see a bit of a, even on a 5-minute chart, if we see a bit of a bounce like this, if we see the oscillator go back to that zero line, and we see price going about halfway, I would say, 50 fib, what is this, 129.50? No, 125.50, sorry, let me get rid of this. 125.50. And we see a bit of a correction rally like that, hit the 50 fib, this goes up to the zero line, starts to turn. I think we can see that fall down to, what did I say? 123.75, I think it was. Yeah. And that could be about 175 pip fall. Stop loss, conservative stop loss could be above this top. For about 75 pips. The other option could be to wait for price to hit this level, turn around, wait for kind of a head and shoulders pattern like this, put the stop loss above here. All right, so price would probably do something like this. Right, so when you get that weakness on this shoulder or the break of the neckline, that could be a way to step in on a 5-minute continuation to the downside, based obviously off of the pattern, the bigger pattern, which is the break pullback continuation here. And that break pullback continuation is basically a continuation of this momentum. Momentum, correction, momentum, and within that momentum, we'll probably see a break pullback continue, or at least you see that decent amount of times. I myself am not going to chase the pound USD downside here. And yes, it could make one more low, but I think the potential, the chance of that, and the number of pips that can be made on the downside like that are not worth the risk, because it easily could be a retracement time too, and we'll see this go back to the zero line. That's actually where I'm more interested in looking for shorts down to the 61.8 fib, which is this right here. All right. Now, mind you, if it makes a correction like this, and this goes back to the zero line, and I manage to catch a short, but the price really doesn't go too far. At the end of the day, it didn't do much, and it's still hanging around here, I'm out of that trade. All right? Because then in that case, we're not going to reach the 61.8 fib, and what could happen is that price does this, and then actually this is a failure to reach the 61.8. It's actually respecting the 50 fib instead, and we could be using that 50 fib tomorrow, for instance, for a bounce to the upside. So that's something you want to be aware of. The target for now, definitely 61.8. But if it doesn't manage to get there today, it's not like this target is a done deal, and it's definitely going to get there. If the price doesn't manage to get there today, there could be a double bottom off of the 50 fib, and we can see tomorrow that maybe that rally that I already talked about, considering the potential for an ABC zigzag. Or if it doesn't break today and there's a double bottom, but tomorrow price breaks through the double bottom, then we could see maybe the fall to the 61.8. Also possible. Point is that at the end of the day, you gotta wait for tomorrow to give us more information, because it's an indecision zone, and it's gonna prove itself by either breaking to the upside or breaking to the downside. All right, I hope that makes sense. That's my 2 cents, basically when approaching targets on a pound USD like this. All right, odd USD break is looking iffy. There are some wicks, so let's see how this candle closes. But here too, 50 and 61.8 could be bouncing spots. All right. Any questions by any chance? Does anyone want to ask me something? Look at a particular pair that you have in mind. By all means, feel free to do so. Today we got more webinars. Tomorrow we have strategy. I think I want to take a look at price action again, because recently been looking at a lot of moving averages. So I think that could be a good idea, just to look at almost blank charts, or as close as you can get to it. And we'll focus on that tomorrow. Strategy is the name of the webinar tomorrow. Wednesday evening, and then it takes a look at Murray Math. Thursday evening, then at night, take a look at tips, practical tips, how you can combat and handle fear when trading. A dollar, basically, I remain bullish, but it's true that we'll probably see a retracement, a bearish retracement for this month. I think that, or maybe even next month, but ultimately I think that is a retracement. If you look at the statement of the Fed last month, last week, the FOMC statement clearly said that they're looking at how many rate hikes and at what pace. So relatively still, there's still good monetary expansion to be expected. Maybe not as much as we expected, but they didn't stop talking about rate hikes. They're still talking about when and if, and when and how many. So looks like retracement, but for more dollar strength to come still later on this year. All right, to wrap it all up, perhaps, if there are no other pairs, let me just maybe take a last look at New Zealand, and then I'll do a recap quickly. I was curious about the New Zealand because there was a big trend up on this pair, and it seems like it's slowing down a bit. No divergence though. So, many traders would say, hey, this is maybe head and shoulders, but I think that chance is small because we don't have divergence between these tops, these tops right here. Because if you look at the last swing high, this is all one push still. So from between this top and the next, there's no divergence. So I think that chance is on the small side. So I think that the upside still looks pretty good. Especially this week. In fact, this could be a breakout, pullback, continue. So I would be interested to see how price responds in this support level. Maybe that could be a bouncing spot. That could be interesting. Dollar CAD, well, I'm seeing a lot of divergence in the 4-hour chart, but price has not responded to it, and I don't see it on the hourly. I see actually a strong fall. So I think the chance of reversal uh, remains lingering around the corner, and it could happen eventually, but it has proven to continue so much lower and lower and lower and lower and lower, and the divergence has not played that much of a role at all. So I'm still very cautious, and I think if you look at the hourly, there's nothing really to say much for a reversal up. I think actually these targets could be turning spots for a break of this bottom because we don't have that divergence. This was a strong fall in the hourly, so those reversal chances don't look too well, I think. Last but not least, the euro pound. Let's take a look. A bit messy. Doesn't New Zealand looks a bit better, but could continue higher as well. We have a good uptrend on the daily. But it's a bit messy at this moment. It doesn't look that great. So to me, I think that depending on, if we get one more maybe 1 hourly candle like this, a pullback and downside is good onto your dollar, down to, for instance, to these support levels. Same with the pound USD to the 61.8. In fact, it keeps pushing. But eventually it will make a retracement back to around the 55th. Should be in the New York session probably. Same for the euro dollar probably. Dollar yen too. If it closes near the low, I think that is interesting. Same for the pound yen, but looking for retracement first, and the euro yen. So I think the euro yen, euro dollar, pound dollar have that kind of same kind of setup. We're seeing breaks to the downside. I think that I would look for a pullback and continuation later today. I think those are the main ideas for myself at least. Aussie could be the same, but it looks a bit. I would rather look at the other four. Dollar yen, same thing. Actually, looks like a break to the downside. Those seem to be, I think, the most interesting. I would say for today. And the odd New Zealand perhaps upside, but yeah, those I think have the most potential. Let's say the majors at this moment, but and the odd New Zealand. All right. Well, thank you so much for joining. Appreciate your comments and hope that you have good trading today. And hope you can join the webinars later this week too. Strategy. We're going to look at price action one more time and Murray math and fear, or how to handle fear actually. So that will be lined up for this week. And talk to you soon. Cheers.